Hey everybody, welcome to the channel. Welcome to all the new subscribers. In today's video, I want to talk about a couple of things. I want to talk about self-directed investing or do-it-yourself investing, as well as I want to share with everybody my portfolio, kind of update everyone on what I'm doing, what are the things that I'm prioritizing, as well as I want to share a story to begin with of why I've chosen to talk about this topic today. A couple weeks back, I had a conversation with a colleague, and it got me thinking that, this might be something interesting to talk about, because I would assume that there's a lot of other people out there that may be able to relate. So I was having a conversation around finance with a colleague. It was sparked because we were talking about our employer, ESPP. If you're not familiar with that, it's Employee Stock Purchasing Program, where you can buy individual shares of the company that you work at a discount, at a small discount. And we started talking about investing just generally, and out of curiosity, I was asking my colleague kind of, just out of curiosity, what are you doing to invest, or, what are your plans? Just kind of broadly, not really to get into any numbers or details. And the individual that I was talking with, he was in his early 20s, maybe 23, 24, and, this is his second job out of college, has college, debt, has to pay down his college loans, his student loans. And when I was asking him, I said, yeah, do you invest? And he said, well, yeah, I do. And I asked, okay, well, that's awesome. What do you invest in? And he said, well, I don't really know. I give my dad this, he has his accountant, and I just give him, a percentage of my paycheck every 2 weeks, and he just does his thing. And I kind of sat there, and I was really surprised, because he was really interested in the topic, but he wasn't doing anything himself. He was outsourcing everything to his father's accountant and relying solely on, on his discretion. And, I said, okay, well, do you have any idea on what he's investing in? The type of funds, is he investing in bonds or and all that good stuff? And he says, well, we get a yearly update. And it really surprised me, because the person that I was talking to, he's a smart guy. He went to a great college here in Central Texas, interested in the topic, but just really would prefer to have somebody else do it. And then throughout the conversation, I kind of shared, what I was doing and, what's worked for me and what hasn't worked for me. And I said, the barrier to entry is really the hardest part, like getting started. And I shared with him, you don't have to have thousands and thousands of dollars to start investing. And I started talking about my portfolio here that you can see on the screen. This is M1 Finance. M1 Finance, you can invest into fractional shares, like your McDonald's or IBM or whatever, and you don't have to pay for the full price of the stock, but you can get fractional shares, and you can set up your activity where you're actually investing every single day. You can set up your transfers that way, and then based off of your target allocation, it will then, the system will automatically rebalance without causing, a transaction, a sale, or a taxable event. It'll automatically invest into your underweight holdings based off of your target allocation. And so I was having this conversation with my colleague, and, sharing, okay, well, you really don't have to invest in individual stocks, because, it is a little bit riskier if you don't really know the underlying business, what you're investing in, and it can be a little bit intimidating. And the conversation continued, and at the end of the conversation, he decided, okay, what, I might check it out, but for now I'm pretty good. I'm comfortable with it. It's fine. I'm just going to continue what I'm doing. And this video, the conversation that I'm having with all of you here on YouTube, is sharing my journey of how I was able to start investing and have a do-it-yourself approach. Now, I invest in my 401k and my Roth IRA, which I don't share here on YouTube, at least right now, into low-cost, broad-based index funds, like your Vanguard Total Market Fund, your S&P 500, all of that. I personally do not invest into bonds, at least at this point in time. I may in the future, but at the moment I do not invest in bonds. I also invest in real estate. I've shared other videos in the past here, and I'll link a description here in the top right. You can check that out on how I invest into real estate investment trusts, into individual REITs, as well as ETF REITs. But if you're interested in that, you can go check that out. But in my main portfolio here, I invest in a little bit of an unconventional way. And I shared that with my colleague. I said, hey, you could just invest in one index fund. You could go off of the expert pies that, that M1 offers here, those robo advisors, they have that here. And I say, well, you could check that out, and that's kind of like the same thing that what you're doing with your dad's accountant, where you're just kind of relying on somebody else. But, in this case, you're actually funding it yourself. You can see exactly what you're investing in. You can see, okay, what has been the performance? You can see, okay, what are the different types of vehicles that you're investing in? And for me, when I first started out, I did a lot of research into the expert pies here with M1 Finance, and I decided for me, I was going to do my own initial research, and I was going to invest in individual companies that fit, that I understood, and that were kind of in my circle of competence, that I understood, for the most part. Some of these companies, I've looked at their balance sheets once, and I don't look at them every single week, every month. I don't listen in all of their quarterly earning calls. I've done my initial research, and I'm confident that they're going to continue to do well. And if they don't do well, that is life. You could also invest into an index fund, and the fund as a whole could also have a downturn. And there's always things that you have to consider. But this is how I have decided to do this. And I just thought that was really, really interesting, the conversation that I had with my colleague. And just a few days later, we were on a business trip with the entire team in Chicago, and we went out for a happy hour. We were all having dinner and drinks and all that good stuff. And there was 6 of us, and of the 6 that were with me, only one of them was investing on their own. The others did a similar thing where they gave it to their parents and they had their parents do it, or they were, relied on somebody else. And the others didn't do anything except for their 401k. And the one individual that did do it himself, he invested 100% into Bitcoin. And so that, I'm not here to say that is the right or wrong thing to do. He's a young individual. He also invested in cannabis. So cannabis and Bitcoin. So nothing really, something that we talk about here on this channel about dividend growth companies like a McDonald's, or, if you look at it, I have it broken up by sector. So I invest into, to a certain individual stocks, individual companies in each individual sector. For example, in consumer discretionary, I invest in a Disney, I invest in a Marriott, I invest in a Nike, Target, McDonald's, all of these companies. And I'm not here saying that, you shouldn't invest in a Bitcoin, you shouldn't invest in a cannabis. Everyone has their own strategy. But for me, what I document here and share with everybody on YouTube is my journey to building passive income. That's what it's all about. It's about building passive income or cash flow that I can then one day no longer have to rely on my active income, my day job, and then pull back and rely on my passive income where I'm getting paid to sleep, essentially. And I've shared another video, and I'll link in the top right, around the differences between active and passive income or cash flow. I shared a video not too long ago on that. And so what I'm getting at here is, the people that I was talking with around investing and finance, they were all in their mid-20s. And the one big advantage that they have over me, in looking at this strictly from today's standpoint, is time in the market, in compounding. If I were to take the exact same strategy as they would today, they would have a good amount of time longer in the market for their money to work for them and to compound. And And really, that's what I'm doing here on YouTube, and that's what I'm sharing with everybody. And I'm very transparent. I try to share exactly what I'm doing and why I'm doing it. You can see here on the screen, this is my actual account. It's with my actual percentages and dollar amounts that I'm investing. And what I'm really focusing on is the earned dividends. The capital gains or the market gains, this has not been realized. I have not sold these. These are just actually gains. They could go up and down as the market fluctuates, but what I'm focusing on is this continual growth in the earned dividends so that I can one day pay my living expenses with the dividends. Okay, and I've taken a fairly straightforward approach, and this has changed the last week simply because of my personal situation. Before, I was investing $300 every single week into my M1 Finance. So $100 on Mondays and then $50 Tuesday through Friday. And I've dialed it back short term right now to just $10. Because my wife and I were in the process of closing on a home, and so we need a little bit more money for that down payment, and so I'm trying to save. I've cut down on other expenses where we're going out to eat, we're going to entertainment, stuff like that, so that we can save enough money for that down payment. But in the future, here in a couple of weeks, probably months, I will then be picking it back up and doing 300 a week. But for right now, I'm just doing 10. And this is the activity feed. This, you can see here the dividends that are coming in. I mean, we're not talking about hundreds of dollars, right? Lockheed Martin only paid 68 cents, but I don't have very many shares of Lockheed Martin or T-Rowe, or DGRW is a dividend growth ETF. If I were to go look into Lockheed Martin or T-Rowe, for example, I only have 2.5 shares of T-Rowe price. So that's something to factor in and say, okay, well, I'm only getting a small percentage or a small amount into dividends, but I also have a very small size or a small amount of shares into these individual companies. All right. And so the thing that I love about M1 Finance is you can see, okay, well, what is your cost basis? What is the current value? You can see your unrealized gains. Unrealized gains is what you have not yet sold off. So right now I'm currently down 234 on Kraft, 128 on Altria. But these are unrealized, so I haven't sold them. So unless I execute on a trade, I'm not actually losing anything, right? I'm not actually down. And this is really the strategy. For me, it really doesn't bother me if the price goes up and down. If it goes down, that means I can invest into these wonderful businesses at a discount, all right? And for me, as a self-directed or do-it-yourself investor, this is what I'm looking at. This is what I enjoy, and I don't spend hours upon hours in the portfolio. I've set it up methodically, and I've looked at, okay, the target allocation, what I'm going to be investing in, and I do adjust this from time to time. The consumer staples, the industrials, the different sectors, and I've adjusted the target weighting, and it's super easy to do it. You just go in here and say, okay, well, you know what, I actually want to invest more into utilities. So you're going to up that up and say, okay, well, actually, I think there's going to be a recession tomorrow. You know what, I don't want to be so heavily invested into technology. For example, those are things that you can do as a self-directed investor. All right, and the portfolio itself, and if this is the first video that you've ever watched on my channel, I do not sit here and say that I am going to beat the market, right? That's really not the theme of my channel. It would be ironic if I was down like 20% and the market was up, 70% or whatever. I know those are really extreme, but like that's not really the theme of the channel. But here, just looking at the S&P 500 index alone, over the last month, it's up, 1.27. So not too crazy. If you were to look at the Vanguard S&P 500 ETF in VOO right here, you can see that it's actually up just shy of a percentage over the last month. And if you look at my account, and this is something that I enjoy, it's not not really here to brag, but like I really get excited about it. It's like, okay, well, I've hand selected each one of these companies into my portfolio, and we're up 5%. Now, this also factors in dividends. So if you remove the dividends, It's up just about 5%. The portfolio is up 5% over the last month, where the broader market is up 1%. Okay, so pretty cool. I mean, who's to say that that's going to continue? But it really gets me excited, and I know that I'm on the right track. The markets fluctuate; they're volatile. They go up and they go down. But really, everybody, this is what I'm interested in. I want the earned dividends to be growing month over month, quarter over quarter, year over year, so that I can then rely on my passive income to pay for my living expenses. Right? And I've invested in many different companies. I mean, some of these companies, I personally do not have any affiliate. Like, I don't use them as a consumer. Like, I don't know that, okay, I know PPG, I know I've used some of their products in the past, painting products, but Ecolab, you'll run into this here at your local gym or at your office. They have different products that you'll see on the side, Ecolab. And so there's businesses that I'm investing in that I don't know 100%. I don't know all the management. I don't know all their quarterly earnings. I have done my initial research, and I'll share a link in the top right of how I've chosen to select and invest in a dividend growth companies. You can go ahead and you can check that out. I go into pretty good detail on how I personally do it. But as a self-directed or a do-it-yourself investor, this is how I've set it up. And really, for the most part, it's on autopilot. I set up my account, I'm funding it every single day, and that's something that I love about M1 Finance is I can actually invest daily. With Robinhood, I think you can do it weekly. TD Ameritrade, you can only do it weekly. But with M1 Finance, you can actually do it every single day. So pretty cool. And because I have two accounts, I have my real estate account for my REITs and my passive income account, and that's how I have it set up. And like I said, if you need to change this or update it, you can go in and you can update and say, okay, I don't want to invest $10, I want to invest $30. And you can change that and do that all yourself. And so it's really, really easy. And then coming back to that conversation that I had with my colleague, I think the intimidation of, well, I don't want to lose money. I'm unsure of what I'm doing. Really, you can do some initial research, and I think the most important thing is just getting started. And the more and more you can take control over your investing, I think the better, the more comfortable you're going to feel about it. I think if it continues as an unknown, and you don't know what's going on, you're not in control, I think that's going to create more anxiety around investing, especially for younger folks, people that are right out of college, they have student debt, all of that good stuff. In this channel, we don't really talk about, debt. I mean, I think Dave Ramsey does a pretty good job about that. I think on this channel, I'm really talking about and sharing how I've decided to do it and what's worked for me. And I'm very transparent. I mean, there's going to be times, and I've had times where this was in the red. When I first started out here in May, we had a pullback in the market, and I was in the red. But you know what? I kept going. Every single day, I was adding money. I was transferring money in and letting the system invest and go through the process here based off of my target allocation. And I've changed this up a little bit, not too much. I try to keep it consistent. What I want it to be fairly close to the target so that I can take advantage of the auto rebalance. And I've mentioned that in numerous videos, the importance of that. Okay, and so what I've done, and if you were to look at this, okay, you say, all right, Jake, this is great. You have almost 100 companies here, and 91 right now. Is just thinking, okay, well, how do you select these? What do you know what you're doing? I've taken a pretty simple approach where you go over to ETF.com and you can take a look at the Vanguard 500, S&P 500 ETF. And you can scroll down to the bottom here and you can see, okay, if you were to just invest into the Vanguard S&P 500 ETF, you're going to have these companies right here in the ETF, and they're going to be heavier weighted. For example, the top 10 are weighted by over 21%. And a good portion of these I already have in my account. So I guess you could look at it as if, I have kind of my own index fund, my own ETF through M1 Finance, because I'm also investing into fractional shares. I'm investing kind of like an ETF, but for free. And I'm doing it myself. But a lot of the research and a lot of the companies that I'm holding, you would hold in your traditional, your most popular ETFs, like the Spider SPY or the Vanguard here, the Vanguard Dividend Appreciation ETF, where they're looking at a market cap weighted index, so the size of the companies, and that they've increased their dividend over the last 10 years. And so when you look at this ETF and you look at the top 10 weighted holdings, 35%, 9 out of the 10 here are in my portfolio. The one that's not, Abbott, I have AbbVie. So I track the dividend appreciation ETF here through Vanguard very closely. If you look into the other funds, you got Union Pacific, you got Texas Instruments, Nike, Lockheed Martin, we talked about Lockheed Martin earlier, 3M, a lot of these companies you're going to find in my portfolio. And that's how I have it set up. And this has worked for me, and I think my audience that I'm talking to here on YouTube, it's really newer or beginner investors. And if you're watching this video for the first time and you're thinking, okay, wow, well, this is cool, Jake, that's awesome, but this is a little bit too much for me, or I don't have the time, or maybe a little bit difficult to grasp. My recommendation, I'm not a financial advisor, but I think looking at these low-cost index funds and starting that way, right? You can go in and you can take a look at these low-cost index funds here, and you can start looking at sorry, I'm scrolling here up and down, everybody. You can look at the top holdings. You can say, okay, well, these might be companies that I could look into. Or you can go and you can look at individual ETFs. And you can do that really easy here with M1 Finance. And you can take a look at the different companies. You can actually look at ETFs directly. You can look at, okay, well, what are some of the more popular ETFs? And with the Spider SPY, I mentioned that earlier, and you can see, okay, what is the expense ratio? Expense ratio, you want a lower expense. That's what you're paying for the ETF, right? And you can look at the dividend yield, and this is a good way to start. And what you can do is then you can go in and you can start building your own pie. You can create your own pie and say, okay, say you've never invested before. Now I'm addressing, coming back to the example that I used at the beginning of the video, the guy that I was, my colleague who I was talking to, I said, well, you can do it yourself. It's really not too complicated. It's maybe a little bit intimidating because you're not quite sure what you can do. But a great way to start is, you can go in and you can search and you can set up and create your own pie, right? So the Vanguard Total Market Fund, you can add it to your basket. You can go in here and you can go, all right, well, I want to add some of these funds. Let's say you want, I don't know, you want to invest into cannabis, right? And let's say, okay, you want to do that. Go for it, right? And then you can add it to your basket, you can add it to your pie, and then you can set it up really easy. And then here, look at that. You got your new pie, and you can see, okay, well, how has the performance been of these 3 vehicles that I'm investing in, or cannabis, VTI, or VOO. You can check the dividend yield, you can check the expense ratio, and you can say, okay, well, actually, I want to change it up a little bit. My pie. And then you say, okay, well, I want to be a little bit more conservative, so let's do 10%. Let's do, or you can even say, okay, I want to equally weight them, or you can do 70%. Whoops, not 70%. 50%, and let's say 40%. You could do that. You could also say, well, you know what? Actually, I want to invest into Facebook. All right, well, go ahead and add Facebook to it. And you could say, all right, well, actually, I want to be a little bit more conservative. Maybe I want to invest into some bonds. Yeah, you could do that. On my channel, I really like to invest into dividend growth paying companies. And that's what I talk about on the channel. But you can do it. It's really simple. As a do-it-yourself investor, this is a great way to start. And that's something that I really love about M1 Finance, is that it really breaks down that barrier to entry. It makes it so much easier for you to get into it. But everybody, that's what I wanted to talk about on today's video. If you like the video, if you like the content, please go ahead and hit the like button. Subscribe to the channel if you're not already subscribed. Next week, I'll be coming out with a whole nother video around investing, sharing my portfolio. If there's something specific that you want to hear me talk about, leave me a note in the comment section below. I read every single comment. I think the community here on YouTube is so great. I really appreciate every single one of you, and I will catch you all in the next video.